we're going to talk about the all-important question of what really are mutual funds buying. Sonal, I came across this very interesting report by Fisdom. We'll have the guest on, of course. But it came across this very interesting report by Fisdom. We'll have the guest on, of course. But it talks about what the top 10 AMCs are buying in terms of sectors, the largest stocks, some of the unique stocks as well. So it'll be fun to hear that, right?
It will be, and that's why let us get our guest for the day. It's Anand Dalmia, who's the co-founder and chief business officer at Fisdom. Anand, good afternoon. Thank you so much for joining us here. While we'll talk about your report in greater detail as to what are mutual funds really buying, let's talk about the data that we just got for the month of January, because we saw SIPs steadily going up. It is at a record high level. Overall flows into equity schemes, they also increased on a month-on-month basis to come around that 12,500 crore mark. Any trends that you have picked up on the kind of funds that are getting money and those that aren't? Where is the interest really right now?
So, thanks for having me on the show. I would say, let's look at, what's happening in the market, right? So for the last 1 year or so, the market has been more range bound. And the biggest challenge in the market has been inflation. Now, to counter that inflation, we have all central banks increasing the interest rates. So if you look at all mutual funds, we have two large categories, equity and debt. Now, in the debt category, given the increase in interest rates, most of the schemes are really suffering. And, people are taking the money out, we're seeing redemptions. The only schemes, which are seeing inflows for now, these are, the liquid categories and the ultra short-term category. And the target maturity fund, where people know, okay, if I get in today, I lock in a certain rate, and even if the interest rate were to increase, I would not make a loss. So on the debt side, we are seeing money flow into these three categories. Now, depending on the month, advance tax, different other things, liquid funds can be up or down, but ultra short term and the target maturity and a lot of NFOs in target maturity is where we see the money flowing on the debt side. On the equity side, there are two specific categories where we see maximum amount of money that has flown in the past. The large cap and the schemes where large cap has a big percentage, and the hybrid categories, largely the balance advantage category. Now the balance advantage category is seeing outflows, for the last 3-4 months. And the key reason for that is, again, the debt portion of those funds is not doing well. Even on the equity side, majority of it was large cap. So again, that segment is not performing. So we are seeing the balance and the balance advantage categories not doing well. As a result of it, again, facing some redemptions. On the pure equity side, we have, the biggest categories were large cap and flexi cap. Now, both large cap and flexi cap, post June of last year, first they saw a decline. And in the last quarter, they started seeing redemptions. And the reason is the same. You have Indian indices, everyone is talking about that, it's slightly on the valuation is on the higher side. And, they had a great run up for a long period of time. So, we are not seeing large cap creating any alpha. In fact, we are seeing a shift of money from large cap categories to ETFs. And, people are saying, okay, does a fund manager actually have a role to play in large cap as a category? Now, the jury is divided, the results are divided, but we're seeing some money flow to passives. And we're also seeing redemptions given, these funds are not performing so well. Flexi cap as a category, while the name is flexi cap, we still see in India, majority of the flexi caps are dominated by large cap, as a 80%, 75, 80% is they've invested in large cap. Again, they have underperformed. As a result, we see, redemption in those categories. The categories which are catching the attention of investors is small cap and mid cap. That's where active fund management has a key role to play. That's where the valuations look attractive. And we're seeing that those two segments are seeing strong inflows over the last 4 to 5 months. As a result of that, two other categories, which is the large and mid cap, and the multi cap, I would say also doing reasonably well, given that they have a good quantum of mid cap and small cap. So I would say mid cap and small cap is the key thesis in the market, and funds which have a good percentage of that are seeing inflows, the rest are seeing outflows on the equity side.
All right, that is on where money is really moving within all of these schemes. Anand, thanks for joining us. Large cap categories for the last 2 months, I'm talking about November and December, saw outflows. But actually, we just got the January data and there's been an inflow this time around. So what do you make of that? And do you think that now perhaps people are preferring to stick with the safer, larger names?
So I would say, look, as the market gets more volatile, we always want to run towards the safe events, right? We always want to make sure that we don't lose money. So I think there is, large cap as a category, every time there's the markets come down, they start looking attractive, from a valuation perspective. Plus large cap in that segment, if you look at large cap and if you look at Nifty, which is a good reflection of most of the large cap funds, the two key categories are banking and IT, which constitute around almost like 50% of the index. Similarly, most of the large cap funds would have around 40 to 50% in IT and financial services, BFSI. So every time there's a fall in the market, it starts looking attractive. And, we see that people who are not so prone to volatility and don't want to take a lot of risk, wanting to come back to large cap. So there's some money coming back into large cap, but still, we see most of the investors being more fascinated by mid cap and small cap.
Okay, so let's talk about the study that you've conducted, which talks about what mutual funds are buying. So tell us, what are the top 10 AMCs buying? What does the sector allocation look like at an industry level?
Look, I would say sector allocation, if you look at it, I'll talk about the sector and then the stocks. On the sector side, it continues to be the two key sectors are always BFSI and IT. I think IT for some period of time, if you look at quarter two was, losing steam, given that, US interest rates were increasing. People felt that US will go into recession. It's still the debate is out. And as a result, Indian IT companies also, faced the issue. NASDAQ almost corrected 30%. Now, as a result, we saw not a lot of money flowing into IT. Still, we had some money coming into there. In the last quarter, once, that the money started coming back to IT, plus the banks are doing phenomenally well. Their NIMs are doing great. So both private banks as well as PSU banks are getting a lot of attention. So I would say BFSI plus IT continues to dominate as a sector. Given that, this was just before the budget, we obviously saw consumer discretionary and FMCG doing very well. And energy stocks, we have Reliance classified as an energy company. It's debatable whether they should be classified as an energy company only. Reliance obviously always gets a lot of interest given it's 10% of the index. So those were the key sectors, that saw inflows. And on the outflow side, I would say, people continue to look at segments which are getting, the valuations are getting more, I would say, volatile, stuff like metals, which are, I would say, more momentum driven. They saw some outflows. So that's on the sector side, where we saw both, inflows and outflows. On the specific stocks, I think when you look at large cap, given that large cap still dominates majority of, what the AMCs hold today, large cap saw this, the usual suspects, in terms of the index names. So you have, the top 4 private sector banks, SBI, you have the top 4-5, IT companies, you have Reliance, you have, Unilever, you have Sun Pharma. So the usual suspects in large cap, which continue to dominate majority of the holding for most of the mutual funds, as well as money continues to flow into them. On the mid cap, I would say, there were some interesting names there on the mid cap side. On the auto side, you have TVS and Bharat Forge. On the hospitality side, you have Indian Hotels. They continue to do exceptionally well. The numbers are just great. You have Max Healthcare on the healthcare side. And then, you have Federal Bank. I think banks are continuing to do well. And old age private sector banks, Federal Bank, City Union Bank, Karnataka Bank, some of those banks are getting a lot of fancy. On the small and mid cap, that's where, as I said, on the small cap, that's where, active fund management plays the maximum amount of role. We saw some very interesting names like KEC, Gujarat State Petroleum, you have City Union Bank again being there. So some of these names are where the inflows were there on the mid and small cap.
Okay, so that is what all of these funds are really holding in terms of some of the larger picks. But Anand, you just mentioned that IT is seeing a lot of interest, right? And it is one of the top sector allocations as well. In the very, recent few weeks, have you seen any fresh buying in IT stocks? Because, we have seen them sort of bounce also quite a bit, of course, in relation to what's happening globally. But any very fresh buying that you're seeing here? And if yes, with stocks?
So I would say, we are seeing fresh buying into IT on a month-on-month basis, and that continues. Within that, the large cap IT is where most of the interest is. There was a time when large cap IT used to trade at a significant premium to mid cap IT. I think that that premium went away. In fact, it started, being reversed for some time in the middle. So we are not seeing a lot of interest in mid cap IT stocks, but the top 4 IT stocks is where we see maximum amount of interest. Infosys, TCS, Wipro, and now L&T plus Mindtree. I think that's where, majority of the flows are coming.
Okay, all right. So, Anand, we'll continue this interesting discussion on the other side of this very short break and come back and talk more about your report. Stay tuned. Welcome back. You're still tuned into Mutual Fund Corner and we're discussing what are mutual funds buying with Anand Dalmia of Fisdom. Anand, when we have been talking about a lot of stocks from the IT space, large cap, small cap as well, but you've also put together a list of unique stocks that have seen the highest market value. Take us through those names and how big is the holding here?
Look, we always try and see, what are the fund managers doing to create that alpha, and trying to find names which are unique to a particular particular AMC or a scheme, but not, across AMCs. We come across some of these names. Most of these names are in the range of 150 to 200 crores in terms of what AMCs have bought. So, for example, you have something like a Titagar Wagons and a Time Techno Plus, which an HDFC AMC has bought. Two unique names that we don't see across the spectrum for some of the other AMCs. Both are in the range, as I said, below 200 crores. You have something like a Kalyani Steel that has been bought by DSP. Again, this is a unique name that we see on the DSP portfolio, not on the other portfolios. We have Religare Enterprises, which has been bought by Motilal Oswal. They do a lot of research around some of these names. Very interesting name. Again, not too many AMCs on it. And, we saw Nippon coming out with Tata Steel Long Products. So some very interesting names, 100 to 200 crores. But, we love to talk to the fund managers to understand what the thesis behind these names. And I see, this being one of the key reasons why, some funds perform better than others.
Okay, that list is very interesting to me, because it's obvious, right, that you would expect an ICICI Bank or HDFC Bank to be in portfolios, but this list is definitely more fun to watch. But Anand, the next question that I have is that with the entire Adani crisis playing out, do you expect that there will be higher redemptions in index funds or in ETFs? Because we do know that the Adani group of stocks is held largely in, these passive funds, right? Actively managed funds don't have that much of an exposure to the Adani group. In fact, the data which just came out also, we've seen a sharp decline in ETFs. I think it's down around 1,700 crores. And this is versus the almost 9,000 crores that we had last month. So do you think it's on account of Adani?
Look, some things happen because of sentiments and something happens because of actual facts. So if you look at indices, if you look at Nifty as an index, there are only two Adani stocks which are there, and it's just like less than 1.5% that they have as a weightage. And the reason why someone gets into an index stock is to make sure that, they are more passive. They don't have to worry about what's happening on a stock by stock basis. So just by the fact that it's not more than 1.2, 1.3% of the index, I don't see a reason why, ETF should suffer, if Adani, even if it's volatile. But, having said that, I think, the sentiment it had an impact on the sentiments. A lot of the investors don't actually know what is the percentage that the index has of Adani. And, to a layman, it seems, okay, if Adani is the richest guy out of India or was the richest guy out of India, some of his companies should be very high percentage of the index, while it's not. And we saw as a sentiment, some redemptions being there. But if you ask me personally, I don't think there's any impact on the passive funds as a result of Adani.
Okay, so no impact because of the Adani saga, so to say, that we saw recently. We've spoken about India. Let's talk about top overseas favorite stocks. Which ones are the funds really buying? And is that continuing the interest as well?
Look, I would say, overseas, most of the AMCs in particular, they are more focused on ETFs and the tech funds abroad, except a couple of, different schemes like the China-focused fund by Edelweiss. Most of the funds are focused on NASDAQ and FANG stocks. So even with the NASDAQ now recovering and, everyone feeling that, look, it was oversold. And, the numbers coming out in the last, 6 weeks, we see NASDAQ almost recovering from the lows by almost like 15-20%. Most of the FANG stocks is where, majority of the flows have happened. So Alphabet and FANG, now the name is different, just given most of the companies have changed their name. But, Alphabet, Microsoft, Amazon, Apple, Meta, these are the ones which have seen majority of the flows. Tesla has not seen that yet, but we feel that, look, that will also get its fair due share.
Okay, so that is on the overseas stocks which are, which have the highest exposure. One final question, Anand. We have been talking about this volatility in the market. Pretty much across the board, we're all expecting it to be a very range-bound kind of year. Often at times like this, the advice is that maybe you should increase your cash position. Is that something that you've seen across AMCs, or do you think it's pretty much the same as what we see usually?
That's a very interesting question, Pavitra. I was listening to Nilesh Shah a couple of weeks back. He came and spoke to our customers. And he gave a very interesting analogy. I'll share it. He spoke about the Three Idiots movie. And he said, all these three guys are standing there. The three, heroes in that movie. And when the professor says, who wants to, volunteer, two of them go back. So the one guy just keeps standing there. So if you look at, markets today, people are saying that India is expensive. But if you look at our historical averages, India is not that expensive. Plus, you have to pay a premium for growth. Now, every time there's a correction, India starts looking more attractive. As a result, we start seeing money start flowing back into India. So, most of the fund AMCs and schemes today have the same cash, position, in terms of what they're setting aside, what they had in the past. And every time we see a correction, they jump into to buy more. So cash position as a percentage has not changed. And, the second half of the year is when we expect markets to, show a rebound and break out of this range. And hopefully, we see some of these percentages coming down. But historical averages, in terms of cash positions are more or less what it is now. So no impact there.
Okay, so keeping faith in the long-term story of stock markets. Anand, it was a pleasure speaking with you. Thank you so much for taking out time and talking about these interesting snippets from your reports as to what mutual funds are really buying into and what are their favorites as well. It was a pleasure. Thanks a lot for joining us here on CNBC TV 18.
Thank you so much.
All right.